At one point during the pandemic, Massachusetts had the country's highest unemployment rate at more than 17%. But even before the pandemic, with a tight job market, the reserves for unemployment insurance were stretched thin. Without new resources, that leaves a huge gap to be filled by employers and workers. Some ideas for remedies were recently offered in a report by the Mass Budget and Policy Center. To discuss them is its senior analyst, Phineas Baxandall. Thank you very much for being with us, Phineas.
Thanks, Chris. Glad to be here.
Phineas, to begin with here, talk about the size of this problem and how little time we have to get it fixed.
Well, the size of the problem, I mean, we've gotten very used to having really historically incredibly low unemployment in Massachusetts and nationwide. And, we don't have the nation's highest unemployment anymore, but even though we're getting down below 10% statewide, places like Lawrence, Springfield, Revere, places like that have very high unemployment. And one of the things it does, for families that are unemployed, it has a very obvious and very strong impact. But what I think people may not understand is how much the effect of unemployment extends beyond the people who are directly unemployed. That if you have a business, the people who may normally shop at your business aren't going to be shopping there if they're worried about how they're going to make the next utility bill. They're sort of the whole spending, the whole economy can seize up with unemployment. It's one of the things that make it so dangerous.
And it's an interesting point. This is not just relief for people who are not in work. What about these ripple effects? I mean, what would you say looking back at what they've done so far?
Well, I mean, looking back, I think you don't hear people praising the federal government that much and their swift action. But I think when it comes to unemployment, it's one thing which the federal government did extremely well is that back in the late February and then March, the federal government created really strong enhancements to our unemployment insurance system, which have brought in, about $12 billion, even just measuring from last month, about $12 billion of extra money into the state economy. And really, I think if you take a step back, there is no program that you can give more credit to helping the Massachusetts economy besides unemployment insurance. It is the biggest kind of life raft we've had for the economy since COVID hit.
Well, even with the best possible outcome for stopping the pandemic next year, what about the burden for employers and employees if there's no help from the state legislature or the federal government with the unemployment insurance trust fund?
Yeah, I just take a kind of a step back. When you say the unemployment insurance trust fund, I think most people don't quite get or may not understand the unemployment social insurance program, which is, runs people like your car insurance. People contribute and then they draw from it as needed. And it is a state-federal partnership. So the way it works, the way it's supposed to, is that employers pay taxes based on their payroll to keep up a level of money in the state's unemployment insurance trust fund sufficient for a kind of normal economic downturn. And then the federal government steps in with additional resources during exceptional times, and what's the problem now is that those things are not happening. So the federal government, as I mentioned, did step in really in a big way at the beginning of the pandemic, but those programs have either expired or are going to expire at the end of next month. And meanwhile, at the state level, our trust fund, for almost every year for the last 2 decades, the legislature has kind of said, ooh, this is a painful decision to have to increase employer contributions. We're going to freeze it. We're going to freeze last year's contributions, basically, until the next year, and then the next year, and then the next year. And that is a kind of a fiscally irresponsible move because you don't have enough money in the trust fund. We've only been able to pay the state unemployment benefits because we've been borrowing from the federal government. And as of this year, we have to start paying interest on that borrowing from the federal government. So this is becoming a kind of very irresponsible and very costly kind of measure to not really take responsibility and make those hard decisions.
Well, at least barring some changes at the State House, it sounds as if employers and the workers are going to get hammered.
Yeah, I mean, it's going to be, it's the default rules would increase, the employer contributions from a little under 600 a year to, upward or around like 900 a year per employee. And it varies depending on how much employees making, et cetera. But that's a significant amount of money, and it comes directly out of employers, probably indirectly a little bit from employees as well. And it's something which, what we should have done is we should have been paying this all along instead of deactivating those rules. But now we're going to have to kind of ramp up, find the revenues to supplement that money, and employers at some point or another are going to have to pay what's necessary to make that system solvent. What we should not do is make the system any weaker. We've really seen how valuable such a strong system is. So it's really important that we, if anything, strengthen the system, but don't weaken it.
Well, one thing your report brought to my attention that I didn't think of before is that the wage base for which contributions to the trust fund were taxed was actually pretty low. What should be done about that?
Yeah, this is a kind of weird thing. Like, most people might expect that when they pay unemployment taxes, it's based on their whole wages. But based on kind of compromise that happened way back in the 1930s, only pay based on what's called a sort of a wage base. And this has been increased, a few years ago, is increased from $14,000 to $15,000, but that's still not most people's income. What it means is the employer payroll contributions are only being made on that first $15,000. So what that means is that lower income lower wage employers, lower wage industries like the restaurant industry end up indirectly subsidizing other industries because they're all paying in only based on that smaller amount. What we should do, to get to your question, is we should be paying based on the whole wage, or at least increasing that wage base, the way Washington State, several other states have much higher wage bases than we do.
Well, there are trade-offs involved here as well, because you mentioned what happens when we have this sort of fluid gig economy where a lot of workers are not counted as full-time employees. But I guess that creates a problem for chipping in.
Yeah, so people who work for Uber, Lyft, DoorDash, other of these kind of platform-based economy, or who are considered independent subcontractors, even though they tend to work for the same employer, those folks do not pay, their employer does not pay any payroll tax for them. It's a big subsidy to these kinds of employers that they don't have to pay any kind of payroll taxes. And when there's not much unemployment, that works out not so badly. But when there is a big unemployment, what we saw right now is the federal government stepped in and started paying the $600 a week amount to these employees until those expired. It sort of takes, by taking these employers out of the system, by taking them off the hook, they're not really contributing, they're requiring subsidies from the rest of the economy. And that's just not really the case, especially as they keep growing. It's going to become a bigger problem.
As usual in cases like these, we hear people sometimes going, well, there must be waste, there must be fraud. Governor Baker mentioned the automated fraud that the state was trying to crack down on. Is there enough fraud and waste out there to really avoid the need for doing something else?
You're right. There is always calls for, people will always first sort of imagine, well, let's cut the Department of Waste, Fraud, and Abuse, as if that's a kind of low hanging fruit. Unemployment, because they had to move so quickly, there were opportunities for some big scammers to file a bunch of fraudulent unemployment claims. And from a economy-wide point of view, that's not such a problem macroeconomically, so long as they're spending within the economy from a kind of, wanting the money well targeted, obviously that is a problem. And it's something which I think they're getting better at fixing, and in the future will be a better situation. But it's something that folks have really preyed on the situation. It's one of these things where when the government moves slowly because it's trying to really make sure that everything is done absolutely properly, people complain that it's too bureaucratic and slow. And when the government moves really fast, we have less measures against fraud or against kind of problems, and then people have reason to complain there. So it's a little bit, you're caught between one or the other.
I'm also interested in what the past few months with unemployment insurance tell us about inequality in Massachusetts. In the big picture, most people applying for benefits are white. But on the other hand, if you look at who's more likely to be reliant on benefits, more likely to be out of work maybe, what do you see?
Exactly, yeah. I mean, most applicants for unemployment are white, but insofar as we have data, the unemployment claims are going to people who are disproportionately hit by unemployment. So the percentage of recipients of unemployment benefits who are people of color are higher than you'd think, just based on their numbers in the population. So in that way, it's well targeted. Similarly, as I mentioned before, it's well targeted to communities like Springfield, where there's been a lot more job loss. Unfortunately, people of color have really received the hardest brunt of this pandemic, both economically and in terms of infections. And unemployment is well targeted towards helping that.
And I should have you bring up one other category of worker, the people who were chipping in, essentially, maybe through their employers, but who were not eligible to get benefits.
Yeah. So there are, there's different ideas of exactly how large this number is, but there's a lot of immigrants who work and pay payroll taxes, whose employers contributes payroll taxes on their behalf, but not with their actual Social Security number. And this is something which is, unfortunately, it's a fairly widespread practice, as we don't have more straightforward ways to accommodate these workers and employers' needs. What it means, though, is that the workers have been indirectly, through their wages, contributing towards unemployment benefits, which then they're not able to receive. So we have, there's an estimate that over the last 10 years, it's been about $300 million worth of contributions just from Massachusetts alone for people who can't then claim these benefits because they don't have a valid Social Security number that way. And one of the things we hope in the future, and as the future Congress looks at this, is some way to bring all of these sort of undocumented workers who really have been contributing to our economy into the protections of the unemployment insurance system, however they can do that.
Well, thank you very much for taking the time to join us.
Chris, it's a real pleasure talking to you.
Great, thank you. Phineas Baxandall from the Mass Budget and Policy Center.